Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. There are lots of queries that have come through. We're going to get to that in just a bit with our experts on both the technical as well as the fundamental side. But first up, a look at the market, which is at the low point of the day. So definitely not looking good as we, come to a close on this session. 50 points in the red, but from the top of the session, it's been a near 100-point fall that we have seen on the Nifty, and we have broken below that 18,600 mark as well. Remember, we have been facing resistance at that 18,600 to 700 kind of mark, and after holding at that for a bit, we have slipped below those levels. So 18,580 on the Nifty, that's where we're at. Throughout the morning, we were talking about the outperformance of the broader markets, how the mid-cap index was still holding up, but that has seen an over 150-point drop from the top of the session as well. The banks also in the red as we speak. They've just moved into the red. So, a lot of the larger banks giving up the morning gain. So that is the shape of the market right now. We'll talk more about this. But first up, let me invite our guests on the show today. We have Vaishali Parekh joining us, Head of Technical Research at Prabhudas Lilladher, as well as Astha Jain from Securities. Vaishali as well as Astha, thank you both so much for joining us and taking out the time to go through all of these queries. Vaishali, I'm speaking to you for the first time. So thank you for being on the show as well. We have a lot of queries that have come in, and there's actually someone on the line with us, so let's get straight to that. Shailesh Singh calls us from Ahmedabad. He has made investments in LIC and wants to know what he should do because he is sitting on a bit of a loss. Mr. Singh, please go ahead, ask us your query. Both of our guests are on the line as well, and then I will ask them what their advice is for you.
Yeah, good afternoon, everyone. My query is regarding LIC. I got about 90 shares at an average of about 900 rupees. Post IPO, I think looking at the dismal performance, I'm just worried. I don't think I will be able to break even on this cost. But if I want to come out, what would be the price level that I can look for in the short to medium term?
Okay, could you tell us how long you're willing to hold this investment? Then the guest will be able to advise you a little bit better on it.
I'm okay to hold it if I'm getting the gains, but if there are no green shoots signs on the horizon, I might as well get out. I don't mind holding for at least 2 to 3 years also, if it can give me some gains. But if there is no chance, there's no point being there.
Yeah, oh, absolutely. And, I understand your concern. You bought at an average price of around 900. The stock is closer to 600 right now. So there's definitely been a lot of value erosion there. Asa, let me come to you on this. He's gotten at a high price. Like he's saying, he's willing to hold on for 2-3 years if you do think that the investments can be made back. But if not, then suggest some price at which he should perhaps look at getting out.
So first of all, good afternoon, Pavitra. Talking about LIC, I think he should wait for some time, and he can exit, I think, at around 680 odd levels. So right now, I think it's better because chances are bright that LIC can move to those levels. Now, talking about fundamentals, why I'm saying this, because the results which they have presented, in that results, their VNB margins are increasing and they are moving towards to increase it more. So that itself is a positive point because now they are increasing the share of the non-participating products. So anyways, it is good for the companies like LIC. In fact, if I talk about their other peer comparison also, so on volume front, they have outperformed their peers. So again, a good point for the LIC. And going ahead also, the company is into the continuous product launches as well as they are deepening their digital presence. So I think all these steps will lead to some sort of increase in their financial performance going ahead. But a major increase is not seen right now. Hence, I'm asking to stay invested at present moment of a time, but try to get out from this position at around 680 odd levels, because I think these are the levels till which we can see the stock prices moving. So afterwards, one can get out from the stock. And since industrial as a sector is looking very good, banking as a sector is looking very good, so I advise to take position in any of these sectors. So whatever loss he will make by exiting from this LIC, I think those losses can be recovered by investing in banking stocks like Axis Bank or in the industrial stock, where I'm very much positive on L&T.
Okay, got that. That is the view coming in on LIC. Vaishali, let me come to you also on this. How do you look at it? Like he told us, he's willing to hold for a while if he can make back some of the money. But if not, what is the kind of exit price that you would suggest?
Very good afternoon, all of you, and thanks for having me on the show, Pavitra. So, well, talking about LIC, I would say technically it's getting better. And, well, in a technical language, it's in the process of already higher bottom formation, and further clarity comes above 615. That's the near-term resistance. So once we see the stock moving past 615, I would be definitely looking at a target of 680 to 700 to start with. So in my opinion, he should average at these levels to lower the cost and perhaps get out at a better rate.
Okay, got that. That is both the technical as well as fundamental view on LIC. So, Mr. Singh, I hope that does help you, and that can help you make a decision going forward as well. Moving on to our next query, we have Ashish John Edward, who calls us from Gurugram with a query on auto stocks. He wants to, just get a sense on where you could invest within this pocket. So, Mr. Edward, you can please go ahead, ask us your query. Both of our guests are going to help you out there.
Hi, Pavitra. My question for the experts is, I'm looking to make a fresh entry in the auto space in terms of maybe I have three options right now, Tata Motors, Maruti Suzuki, and Ashok Leyland. My time horizon is like 5 years minimum. So what would you suggest?
Okay, I can understand the interest in the auto space. This place has been up and buzzing, for a while now, and a lot of these stocks also sitting at fresh highs. Vaishali, let me come to you on this. You heard out the options. Stocks like Tata Motors have rallied more than 40% in this year already. The question is, how much more of an upside do you see, and do you think it still makes for a good investment at these high levels?
So let's start with the auto index altogether. We've seen a good run-up coming in, and especially individually, if we talk about Maruti or Tata Motors, they've really given us a very good rally. So buying at these levels would not be ideal. I would suggest let's wait for some decline. So Maruti perhaps at the range of 9,300 and Tata Motors around 530 levels, because next projected target in Tata Motors comes at around 620. So that would make an ideal trade when you buy at around 535 levels. And likewise, Maruti also, we see a next projected target coming towards 10,000, 10,200. So why not wait for a dip, because market is going to very likely to show some dip in near future. We can make use of that opportunity. And talking about Ashok Leyland, well, it has not performed as much as these stocks, but well, we see a further projection of 170 levels. I would say Ashok Leyland to be accumulated right from 140 to 150 band, because 154 technically on a short-term basis was the hurdle, and that's what we saw yesterday. We saw the high towards 154, and from there on we are seeing some retracement taking place. So this is how I would say one should make a strategic purchase.
Yeah, maybe wait for some amount of correction so that you can get in at a more attractive price. Vaishali, is there anything else from the auto pack that you think is fairly priced right now, or where you still see a scope for a big run up? Because a lot of these stocks which you mentioned have already run up so much that it makes you a little bit uncomfortable. But what are there any other picks from this pack? It could be the ancillary companies also.
So ancillary, I would actually look at Bharat Forge. Bharat Forge has not participated so much. So Bharat Forge actually 750 has been the double bottom, and from there on we are seeing a rally. So talking about it right now, it's at 813. Start accumulating with a support of 780, because once we see a pickup coming in this, we would see a target of 850, 880. So Ashok Leyland and Bharat Forge would be ideal in a market scenario like this.
Okay, got that. Those are some good options. Astha, let me come to you on the same query now. This is the question that we've all been asking, that does it make sense to get in at such high prices? Do you wait for a cool off? And what are your overall thoughts on the auto pack as well? I mean, the index in itself is up 16%. So the momentum seems very strong here.
Yes, momentum is very strong. Now talking about all these three stocks, since we have seen a strong rally in Tata Motors as well as Maruti. So I think definitely some breather is there for these stocks to take. So they should, I think, take some breather, and that is the point where one can make a fresh entry. So in fact, even I just agree with what Vaishali has also said. Right now, buying on dip strategy is better for these stocks. So now talking about Ashok Leyland in particular, see, we have not seen that kind of run up which we have seen in the other two stocks. But if I talk about the fundamentals are looking very good. They have seen some sort of a volume growth in their quarterly report of FY23 financials. Apart from that, they have taken some sort of price hike. So I think in fact Q1 of FY24 will also be very good for this company because the price hike which they have taken in April, that will be showing their impact. So Ashok Leyland is looking good to me right now. So I think, and in fact, if some dips come on Ashok Leyland at around 150 odd level, then it is a good level to entry. I think 170, 175 are the levels which are looking at the attractive levels for the Ashok Leyland at the initial one. So Ashok Leyland is looking good to me. So buying on dip strategy is there. For Maruti, again, buying on dips is a good strategy because even Maruti is looking good to me. And for Tata Motors, because Tata Motor is something, a very long-term story. They are aspiring to become debt-free by FY25, I suppose. So, I mean, the financials will definitely going to perform for this company. So, Tata Motors is a long-term bet. So, I think buying on dip strategy is working right now for Ashok Leyland and Maruti. Yes, for Tata Motors, I think some more dips are required because it has already given a good run-up. So, in the long term, it is a good story. But for the short term, I think we should wait for entering in the Tata Motors. But Ashok Leyland and Maruti is looking good. For Maruti, our target is 10,300. For Ashok Leyland, at the initial level, 170 can be assigned as a price target.
All right, that is on the auto pack. Thanks for taking us through all of those picks and targets. The next query comes in from Arpan, who writes in from Kolkata. He holds 14 shares of HDFC AMC at 22.41. He's a medium-term investor and wants to know whether he can hold the stock for 1 to 2 years and if there is a possibility of an uptrend. He is sitting on a loss, like I pointed out. He bought HDFC AMC at 22.40 and the stock is closer to around 1930 right now. Astha, with a 1 to 2 year perspective, like he's asked, do you think it makes sense to hold on to this one?
I think he should partially exit from this counter because the results are not up to the mark of what we have seen in the results. Results were not that good. In fact, we have seen some sort of market share loss also. So all in all, right now, HDFC AMC is not looking that strong. So in fact, not exiting fully is better choice. So I think partial exit is recommended for this stock. And in fact, like I have said, sectors like bank, sectors like capital goods, industrials are looking good. So one can take exposure in those sectors so that some losses can be recovered. So right now, I think partially exit is a strategy which I will suggest for this HDFC AMC stock.
Okay, got that. I'm going to get Vaishali in on the same query as well. Vaishali, this stock has just been dragging for a while now, right? But at the highs, it was above 3,700. Do you think with a 1 to 2 year perspective, there's a scope for a recovery? I mean, there is a bit of a loss now, but do you think it would still make sense to just cut your losses and get out now?
Well, I would beg to differ on that. Actually, I would say, see, the stock has made an attempt to get into a momentum. So right now, we would see some retracement coming in. The view gets negated of an upward move coming this only if 1800 levels break. So now that he has held on for so long, hold on furthermore. If 1800 levels break, then I think it is calling for weakness. But I think if this the way the stock is moving, and right now it is also at a long-term trend line resistance. Once I see the stock moving past 2050, I think this will be ready for at least 2400. So this is how he should take a call. If 1800 levels break, then please exit, or else just hold on. You may get lucky and see a target of 2400 in days to come.
Okay, so that is the technical perspective on HDFC AMC. We have a lot more queries as well, but before that, we do need to take a short break. Vaishali, Astha, please stay with us. We'll be back in just a bit to answer all of those queries. Hey guys, welcome back. You're still tuned into your stocks here on CNBC-TV18. The market has slipped even more, so we're now at 18,560 on the Nifty. There you have it on your screen. So there's been quite a fall from the high point of the day, over 100-point fall that we are seeing on the Nifty. The mid-cap index also, has seen a big fall coming through, which was holding up, and the Nifty Bank also now down around 25 points. So you're seeing a lot of cuts come through in names like ICICI Bank at the low point of the day, Kotak Bank at the low point of the day as well. Reliance has seen a fall. So all of this definitely weighing on the market. Before we move on with our queries, Vaishali, you want to come in on just, the way the market is moving. We have slipped below the 18,600 mark as well. Your thoughts on how this could pan out and this resistance level that we have been seeing between 18,600 and 700?
So, well, we got the glimpse of it right from last evening. I mean, at the latter part of the day, we saw that market was showing some resistance and there was some sort of exhaustion. So, well, that was causing for a thing to worry. So today also we are seeing that market is not sustaining at higher levels. And today the way Nifty has been performing, breaking 18,600 levels, the near-term support comes at 18,450. So as long as 18,450 is held on, there is no damage to the trend. But if 18,450 levels break, then I think there would be further profit booking coming in. Likewise, even Bank Nifty, 44,500 has been a clear-cut resistance. We were hoping that it would move past, and that is how we would be expecting a new high. But 44,500 for now has made the double top. And from there on, we are seeing some corrective move. So near term, 43,800 would be the support. If that breaks, then we would be looking at 43,500. So, well, there is fatigue, there is exhaustion in the index.
All right, that is the market right now. We will talk more about that, but let's try to get in a few more queries before we have to wind up. Thomas George writes to us from Kochi. He bought 100 shares of Hitachi Energy. This is not a stock that we talk about very often, at 1805 in August of 2021. He's a long-term investor and wants to know whether he should hold or sell. Astha, what do you think of Hitachi Energy? The buy price is definitely quite attractive considering the stock is now above 3,800. What would you suggest on this one?
I think it is a hold. First of all, I want to give the price target, which is around 4,040 to 4,100 at the initial level. So this company has shown very strong performance in their quarterly earnings. In fact, the order book is very strong. And what I have seen that they are getting orders from the other segments also, like the insulated gas and switches, etc. So substations. So this is really working well for them. In fact, they are into the solar business also. So there also we are seeing strong traction in their order book. So this counter is looking good because of the strong results they have posted and because of the strong order book they are having right now. So I think on the basis of that, there is a strong revenue visibility going ahead, and hence I am recommending hold on the stock.
Okay, hold on the stock. Vaishali, what is your call? Do you agree? And would you also recommend to hold this one for now?
Well, my views do match with Astha's view, because I'm seeing the weekly chart. Since this gentleman has a long-term horizon, I would say, even on a weekly chart, it has come towards a previous high. So it's a matter of time. We can see some further run-up coming in. But well, to support this view, I would say 3,700 should be the support level. If that breaks, then maybe some whipsaws can be seen in the stock, but for now, the way the chart looks, 3,700 holds as a very crucial support, and I think this stock is ready for a higher target of 4,000 and higher.
Okay, both of our guests agreeing that perhaps this is one that you can hold on to, that is Hitachi Energy, currently over 3,800. The next query comes in from Jay Kumar, who writes in from Tamil Nadu. He holds 1,25,000 shares of Suzlon Energy, bought at a little over 8 rupees, 8.65 per share. He also has 20,000 shares of TTML, Tata Teleservices Maharashtra, at around 101. He says he's a long-term investor and wants to know what he should do with both of these investments. By the way, I was looking at TTML's chart for this week. It's up 20% this week. Vaishali, what is going on over here, and what would be your call on this one?
I would say very timely he has bought this stock, and I would say that he should hold this stock because it is getting into a very good uptrend. Right now, 80-82 is a near-term resistance. Once this level is crossed, look for a target of 90 to 100. So I would say just hold on to this stock because it has just started moving from its support level of 68, and it's given a good performance from there on. And still, I see a further run-up coming in TTML. And as far as Suzlon is concerned, well, very good pick even at 8 rupees, I must say. And I would say that now he should hold on, keeping a trailing stop loss of 1150. Because it has made a very strong uptrend, and I think it should continue to do so, because when I look at the longer term horizon, I think the stock is ready for 18 to 20 rupees. So I think he should hold.
Okay, hold on both of these. You know, we've been getting so many queries on a lot of these smaller stocks over the past few days and weeks now. Actually, just shows where the money is really moving and what investors are now interested in. Astha, you come in on both of these as well, Suzlon as well as Tata Teleservices. What would you suggest, and do you think that these are good to hold as well? Because the buy price is pretty good.
Since we are not covering Suzlon, so I will not be able to comment on this. But yes, talking about TTML, I think he can hold the stock, although we all know that the kind of business it is into, so it provides connectivity and communication solutions, especially for SME. They are into the SaaS also, and the other cybersecurity, etc. So they provide a whole sort of solutions to the SMEs. So the problem with this company is that the results are not up to the mark, especially the interest cost is very high, which is drying up all the profits, and we are seeing the losses on the balance losses on the P&L statement of quarterly as well as financial year ending 31st March 2023. So the interest is really right now acting as a dampener on the financial performance of this company, and that's why I'm a little bit skeptical. But I think at present moment he can hold the stock because 80 to 85 are the levels which are looking strong for this company. So these are the levels where he can look to exit rather than exiting right now, because the cost price is really high. So if he exits right now, definitely the losses are high. So in fact, I agree with Vaishali that 80 to 85 are those levels where he can exit the stock, because fundamentals are not that good right now if I talk about the financials.
Okay, got that. But with that, Vaishali as well as Astha, we're going to have to wind down on the show. So thank you very much for joining us and speaking to us about all of these individual queries that have come in. We're going to wind down with the news that the market has seen a 110-point cut from the top. The Nifty Bank has lost 250 points. We're going to wind up. Remember, you can always send us your queries. We'll keep taking them with our experts. And stay tuned, because closing bell comes up for the final hour of trade this week.